you just absolutely cannot stand men's baseball caps. And you say, you know what, I hate those baseball caps. I don't like the way they look. I'm never going to wear one. What's going to happen when you get one? Well, you're either going to give it away, you're going to sell it, you're going to get rid of it, right? But then if your thinking changes and somebody tells you, hey, you know what, there is a great market for these baseball caps, man. These people will buy them by the truckload. And if you put stuff on them like teams, football teams and baseball teams, they'll even pay more than they're really worth. Now what are you going to do? Well, when you get a baseball cap, not only are you going to think about keeping it, you might even think about keeping it because it's going to go up in value. Okay? The same type of thinking comes into play in any traded market. I don't care if it's Forex, stocks, futures, commodities, any traded market operates the exact same way. It's all about supply and demand. Now, why would there be more demand? Well, in the currency market, it comes down to fundamentals. It comes down to, is the Bank of England going to raise interest rates? Is maybe the Federal Reserve going to lower interest rates? Is the Federal Reserve not going to raise as many times as the Bank of England? There's a lot of things that can play into fundamentals, and that's why I don't really get into a lot of it, because it can get very complicated. But just know this. The chart is going to represent the shift in thinking, and that's the whole point of this. What we are witnessing on the daily bar, I mean, look at the difference in the day. Okay, this day is closing near to the high. It's closing up. This day closed well off of the high. There's the midway point. I talked about that, I think, last week or the week before. If the market closes underneath that midpoint, in my mind, that's where you have a definite shift from bullish to bearish. Even if the bar is closing off of the low, meaning it's not black and filled in, even if it's not a down bar, it's still bearish. So we have a bullish bar over here. We're closing in normally what was a resistance zone. All of that is pointing to bullish. It looks like the beginning is happening of a shift in thinking. That's what this means to me. And that's why we can plan ahead, I think. Let's go to the weekly bar now. I think we can plan ahead for a break to the upside. Now, where do I think this is going to go? You can see here I've got what looks like a couple of flags. Let me go ahead and take this line off, and I'll take this line off because those don't really apply. Here's the flag pattern, okay? And the flag pattern is coming up off of this low here. All right? How am I going to gauge where I think the market's going to go? Well, I have two methods. I use one, which is based on the opening of the flag, or this part over here. Okay? The other method is taking the pole. And I think they're both valid, and I use them both. I just want to make sure I have a better... Well, I think that the first target is usually the distance between the flag and not necessarily the pole. If I can grab this, there we go. So from the top of this, here's my target. $2 a penny and 45. 2.0145. That's where I think this thing is going. If it can break through the top end here. Now, if it doesn't, what's the answer? Well, if it doesn't, all we've got to do is look at the past trading. What has happened in this area here? The market built a nice support area, didn't it? I mean, look at this. Here, this week closed dead on it, and that was resistance, but then the next week, what did it do? It popped over it. Remember, when the bar closes, what was once support, if the market closes over resistance, then that resistance now becomes support on the very next bar. Now, what does that mean? What does support mean? What it means is, by the close of the next bar, it should be over it. That's what we would naturally expect. So if we're looking at weekly support, we've got to wait the whole week. Don't get excited. Don't jump the gun and start thinking that, hey, the market broke through on the daily, so that means support is violated. That's not necessarily the case. What it means is you need to monitor support and see if it looks like the market is breaking out to the downside. And I've covered a lot of those warning signs and things in the last several weeks.
decision.